Hello, I'm Nadine Blaney. In this week's edition of IG Macro Intelligence, we take a closer look at ASX-listed discretionary retailers. The S&P ASX 200 Consumer Discretionary Index is made up of companies such as Wesfarmers, JB Hi-Fi, and Premier Investments. Year to date, the index is up by 4.93%, despite a slowdown in consumer spending. Wesfarmers, JB Hi-Fi, and Aristocrat Leisure, for example, have fared relatively well since January, up 15%, 16%, and 22% respectively. However, retailers such as Super Retail and KMD Brands have warned cost of living pressures are negatively impacting consumer spending. Baby Bunting and Satire have downgraded earnings expectation ahead of reporting season. The proof is in the data, with ongoing weakness in Australian retail sales. Turnover rose just 0.1% in April month-on-month, or 1.3% on the prior corresponding period. Clothing, footwear, and personal accessory retailing fell 0.7% in April, while department store spending rose just 0.1%. Household goods retail sales rose only 0.7%, which is in keeping with the most recent monthly ABS Household Spending Index, which showed discretionary spending rose a paltry 0.6%, driven mostly by increased spending on other services and furniture and household equipment. Well, the Reserve Bank of Australia held interest rates steady at 4.35% as expected in June, and acknowledged that consumption per capita has been declining as households restrain their discretionary expenditure and as inflation weighs on real incomes. That's a quote. The Australian jobs market also remains tight, which supports retail spending. Employment rose by 39,700 in May, above market expectations. It's widely expected the RBA's next move will be an interest rate cut, particularly the big banks feel that way. An interest rate cut would bring relief to mortgage holders, though it would likely take some time before families feel confident enough to loosen the purse strings. Another potential tailwind for retailers comes on July 1st, when the government's tax cuts come into effect. I think we're still in the midst of a quite pessimistic consumer, and that's going to make it tough for retailers. So says Jason Ireland from McGrath-Nichols. Speaking after the latest Westpac consumer confidence data, he reckons that consumer spending might well come back toward the back end of the year, so retailers need to be ready. Three retail stocks that have come under a great deal of pressure are KMD Brands, Super Retail, and Baby Bunting. KMD Brands recently warned of the impact of cost of living pressures on consumer sentiment globally. Its Kathmandu stores experienced a slower than expected start to its key winter period, and it's forecasting underlying earnings of between 50 million New Zealand dollars. That's compared to $105.9 million in FY23. In the wake of the profit warning, Morgan Stanley pointed to resilient gross margin and tightly controlled operating costs. It has an equal rate rating on the stock. Super Retail issued a trading update at the Macquarie conference in May, in which it said interest rates and inflation were making its customers spend carefully and more value conscious. Morgan says the company's diversified portfolio offers greater resilience to macro trend than its peers, and that Super Retail's customer loyalty will prove a strong advantage. And Morningstar just recently said it sees better competitive cost advantages for Super Retail's core auto parts segment, Supercheap, which accounts for half of its earnings. Baby Bunting also warned that profits would be dented by a cautious consumer brought on by cost of living pressures. The retailer expects FY24 pro forma net profit of between $2 and $4 million, so that is a sharp drop from last year's $14.5 million profit, with January to April sales down 7.7%. Macquarie and Ord Minnett expect ongoing cost pressures and consumer expenditure for Baby Bunting. Morgan Stanley cut its price target on the stock, but has maintained its overweight rating, saying the second-hand market has also emerged as a temporary headwind to the business. And that was your IG Macro Intelligence for today. We'll see you next week.